This is your defending your bottom line and advanced accounts payable fraud prevention. I am Chelsea DeBruin. I am one of the product marketing managers here at Ottimate. I work closely with Joaquin to make sure that the products that we're making and decisions that we make help protect our clients from fraud. And I'm going to pass it over to Joaquin to introduce himself and get us started.
Thank you so much, Chelsea. Hello, everyone. This is Joaquin Lechuga. I am based in Mexico and I am the risk and fraud manager for the risk and fraud team here at Ottimate. So now starting, I just want to start by being upfront about something here, and that being that I didn't come up through accounting. I came up through financial crime, actually. So I spent years working at the intersection of technology and fraud, building transaction monitoring systems and running AML investigations, pretty much watching how bad actors operate at a global scale. So that experience pretty much taught me one of the main things that it taught me is that fraud is never random, it is always deliberate, and it always follows a specific logic. Once you understand how fraudsters think, what they're looking for, how they move, and how they hide, you're going to be able to build systems that stop them cold. And I think that's pretty much what today is about. So by the time we're done, I promise you guys, you're all going to be able to see your AP process through a very different lens. Now we can get into it. Let me start with a very specific number that should make every finance leader on this call a little uncomfortable. That number is 82%. That's the percentage of AP teams that are still manually entering invoices into their accounting systems. And 56% are only partially automated. Now, think about what that means in practice. Paper invoices sitting in someone's inbox, approval chains running over email, spreadsheets, I don't know, having 3 different people editing the files every single week. These aren't just inefficiencies, they are entry points. And fraudsters are more patient and more methodical than most people realize. So let's talk about what they're actually doing. There are 5 main categories of AP fraud. And I want to walk through each one because understanding the scheme is the first step to preventing it. So first we have vendor fraud. This is fraud that originates with your vendor relationships or the appearance of them. It includes fictitious vendor creation, where someone sets up a company that doesn't exist and starts billing you for services never rendered. It also includes vendor impersonation. That pretty much means a fraudster who contacts you pretending to be a real supplier and asks you to update their banking details. You keep paying the vendor, but the money is going nowhere, or it's going pretty much somewhere else entirely. The tell here is that a new bank account for an existing vendor sent over email with a request to update quickly should be extremely suspicious to you. That should always trigger a phone call to a number you already have on file, but make sure you never contact the number that you find on the email. Number 2, we have employee fraud, and this is pretty much internal. An employee with access to the AP system abuses the access. It could be submitting personal expenses as business expenses, creating payments to themselves or accounts they control, or maybe even manipulating invoice amounts before final processing. The riskiest scenario of them all here is when one person has both the ability to create a vendor and the authority to approve a payment to that specific vendor. There's no separation of duties, and one person has control of all of the keys. Number 3, we have collusion schemes. Collusion is when the inside and outside threat work together. An employee collaborates with a vendor or someone posing as one to inflate invoices, to approve payments, and split the differences. This is harder to catch because the approvals look legitimate. The employee isn't always doing anything that looks wrong on the surface, and it's the pattern over time that exposes it. Vendor always bills you under approval thresholds, or charges creep up incrementally. The same employee is always the one who processes and approves everything for that vendor. Number 4, we have payment fraud. Payment fraud targets the disbursement itself. Business email compromise is the most common form. A fraudster can impersonate your CEO or your CFO over email and instructs your AP team to process an urgent wire transfer to a new account. And this always works because it exploits trust and urgency, and it bypasses every system level control you have if your team doesn't know what to look for. Check fraud, ACH, redirect schemes, and card data theft also fall into this category. And the fifth one being procurement fraud. This is a type of fraud in the buying process before an invoice is even generated. It could be bid rigging, kickbacks, splitting purchases to stay under approval thresholds, buying from unapproved vendors. These schemes often involve procurement and AP working together or someone gaming the system solo. The result is overpayment, off contract spending, or money going to vendors who were selected for the wrong reasons. These five categories are very important. They display different entry points, but almost all of them share one thing in common. They exploit gaps in your process where no one is watching. So that's where we need to pay close attention. Now, I want to go over three stories that I have prepared for today. They're very brief, and they pretty much encompass some of the points that we went over in the previous slide. So the first one is the country club that lost $40,000 and almost didn't know. So this is the story of a well-known private country club that discovered not only, well, not only, but it wasn't during an audit. It was completely by accident. It was a random discovery that a food and beverage vendor had been submitting duplicate invoices for nearly 8 months. It was the same invoice, slightly different formatting, routed to two different email inboxes, so no one person ever saw both. Nobody caught it because there was no system level duplicate check. And by the time someone noticed the discrepancy during year end reconciliation, over $40,000 had gone out the door. Here's what I want you to hold on to. Every single approval step had been followed correctly. So the fraud didn't beat the process, it beat the gaps between the processes. And that's a pattern I see again and again. And it's exactly why automated duplicate detection isn't optional, it's foundational. The second story I want to go over is the ghost vendor. This is a classic scheme that I've seen more times than I can count. And one of the most common fraud patterns in my career being this specifically a ghost vendor. This is a completely fictitious company set up by an insider. The employee creates a vendor in the system, submits invoices against it, routes the approvals, sometimes approving them directly, sometimes finding a gap in oversight, and the money goes to an account they control. I've seen this run for years at organizations that thought their controls were solid. The tell is almost always the same. There's no legitimate business address, a personal email domain, and a bank account that has never appeared in any prior transaction history. This is an anomaly detection system. Well, no, this works in a way in which the anomaly detection system flags all three of those signals on day one. So that's the difference between catching it in 1 week or in 3 years. And now the last story I have prepared here is the vacation override. And this goes up. It's a story about a CFO going on a 2 week vacation. Before leaving, they tell a team member verbally to just handle the approvals that come up. So naturally, the team member acting in complete good faith approves a $75,000 payment to a vendor they'd never seen before. The vendor was a fraudulent account created just days earlier. Nobody had configured a formal standing approval policy. The entire authorization chain ran on a text message and on assumption. In this scenario, the fraudsters actively plan for, they watch for leadership travel announcements on LinkedIn or social media in general. They time the submissions during the holidays, during weekends, or high volume periods when scrutiny is thinner. Structured delegation with audit logging doesn't just protect you from bad actors. It protects your well-meaning employees from being put in a position where they really don't feel equipped to handle the situation. So those are three very different schemes. and three very different entry points, but in each case, the same underlying gap, there's a moment in the process where a human had to catch something and didn't have the tools to do it. So right now, I'm going to pass it over to Chelsea. We're going to go over our multi-layered fraud prevention framework.
Thanks, Joaquin. So let's talk about prevention and how Automate can help you with that. So the first one is our invoice trust score. And if you just want to put in the webinar chat, if you've actually utilized this tool before, if you are a current customer, let me know if you've used it. So our invoice trust score is actually a newer feature that we have. And basically what we do is we give it a high trust score or a low trust score. And these are based off three different criteria. So the first one is the source of the invoice. Did it come in through your usual API transfer, the email box that it's supposed to go to? What was the email source on it? That's one thing that we're looking at. Is it a usual process that we see from that vendor? The second one is invoice history. Do you have an invoice history with the vendor that this invoice came in from? Is it somebody that we recognize? And then the third is spending pattern. So if you usually have an invoice that comes from a vendor that's around $200 and all of a sudden you're getting one for 2,000, then that might trigger that this is a low trust score and we think that you should review it. So basically what this does is just lets you know, hey, I think that you should take an extra look at this invoice. We're not 100% sure if this is real. This requires an extra review. I do see a question about where do you find this? It should be when you process an invoice. You can see it there and it will just be right next to the invoice. If you do not have it, you can actually reach out to customer success and we can make sure that that gets turned on for you. So essentially what we want to do is make sure that we're catching suspicious activity before any payments are authorized with this invoice trust score. The other thing with invoice trust score is that you can actually set up an approval policy around the invoice trust score. So if it is a high trust score, you can say, you know what? I believe that this invoice is correct. Let's pass it on to payment. The next one we want to talk about is just catching duplicate invoices. So like Joaquin said about the $40,000 that a vendor made off of duplicate invoices, sometimes it happens by mistake. Sometimes they just constantly send an invoice. We've had customers say that if a payment isn't made, the vendor just keeps sending the same invoice over and over and over again. And sometimes multiple invoices could get paid if they're not caught in time. So making sure that we're identifying those duplicate invoices before they get paid and making sure that spending patterns don't deviate from the norm. So if an invoice comes in and it's for the same thing but have two different prices, we want to make sure that we catch that. The next thing is just our vendor checks. So vendor checks in the sake of, have we seen this vendor before? Is the payment information that they have provided legit? When we look at our payment process for ACH and V cards, what does that check look like? Let's verify that the information that they've given is correct. Let's go through a secure platform to get that information. With the V cards, doing the vendor check. Before we even run a V card with a vendor, we are doing what we call a V card onboarding phase. So we go through this process and a vendor, once they confirm that they can accept a V card, our team will actually enable a vendor profile to go through a V card onboarding. So during this onboarding phase, we'll actually do a secondary confirmation, and our system will only allow for one V card to go to that vendor to have them run that V card before we ever allow any other invoices to be processed. So that way we make sure that the vendor can actually process those V cards and accept these before a bunch of invoices get sent and then duplicate invoices or payments get sent. And then we want to avoid any confusion there. But the biggest thing with this is just to make sure that this vendor is legit, they can accept those V cards, and they're being processed correctly. And then the last piece is our line item validation. So this is basically validating the line items on your invoice or receipt against a CAS catalog or a purchase order. So we're verifying item names, SKUs, pack size, vendors, pricing, And we're going to make sure that any pricing variances between what you ordered or the agreed price is and what's actually on the invoice is flagged and routed for approval before any payment can be processed. We want to catch any potential overcharges before anything eventually adds up. So our next piece that we want to talk about is our approval workflows and the approvals that you can actually have set up. So approval policies can either be multi-level or you can even set them up by role. So instead of saying Chelsea has to approve all these invoices, it could be any PMM at the company could approve this invoice. So the four different approval policies that you can actually set up are one, number of people. So going back to one of Joaquin's stories about having somebody out on vacation, they approved a $75,000 invoice. Um, you could have multiple people approve it. So it's not just that one random person that's approving it, or even be in a position where like someone's on a holiday and one person, a random person has to approve it. Well, at least we get another set of eyes on it before that payment goes through. You could do it around the amount of money that you have on the invoice. So you could say if it is over $100,000, I want the accounts payable manager to look at it and all the way up to, let's say, like the CFO, just depending on the amount of the certain dollar amount. If you know your vendor is uh, could be a little bit shady or you've had issues with a vendor in the past, you can set up approval policies around that specific vendor. And maybe those invoices just require an additional look to make sure that the amounts are right or the dates or maybe the duplicate invoices, everything's good there. And then the last one, if you do have multiple locations, can be set around specific locations. So if you have a specific location that you want to make sure that you're having an extra eye on those invoices, you can set it up around those specific locations. And I'm actually going to pass it back over to Joaquin to talk about our security.
Thank you so much, Chelsea. Appreciate that. So I want to zoom out for a moment and talk about the platform itself because you gotta make sure that your AP automation is only as secure as the infrastructure underneath it. And when I evaluate any financial platform from a risk perspective, I usually try to look after very specific things. And luckily for all of you, Ottimate does have all of those things. And that's pretty much the following. We are SOC 2 Type 1 and Type 2 certified. This was examined independently by A-Line, which is our security, which means our security controls have been third-party verified, not just internally declared. We have role-based permissions, so the users see only what they need to do, what they need to see to do their job. And the person processing invoices doesn't have visibility into approval authority they don't hold. All login credentials are encrypted, never visible to any internal tool. SSL and HTTPS encryption for all data in transit. We have multi-factor authentication and single sign-on support, which are two of the simplest and most effective controls against account takeover. We have regular system audits and continuous site monitoring. We are HIPAA compliant, and the workflow is abiding by PHI redaction for applicable clients as well. These aren't just features to check a box. These are the answers to your IT team, your auditors, and your leadership should be asking of every single platform that touches your financial data, not only Ottimate. Can we move to the next slide, please, Chelsea? Thank you so much. One second, please. I'm having issues here. So for this, this is about knowing your vendors. Technology usually handles a lot, but your team still has to make judgment calls about the vendors, your work, and there's a set of behaviors that, frankly, I wish every AP team in the country was doing. These are very simple steps. They're not expensive, and they prevent some of the most common fraud I've seen. So first, we got a call to verify changes to banking information. This is the single most important thing that I can say on this slide specifically. If you receive an email from a vendor, any vendor, asking you to update their banking details, do not process that change based on the email alone. And I think this goes hand in hand with some of the things that I mentioned already on the previous slides. You gotta call them. You have to use a phone number that you already have on file from your own records. Make sure it's not the same phone number that you see in the email, not the number in the signature block of the email asking for the change itself. It has to be your own records. I have seen significant financial losses that could have been stopped entirely by one phone call. This is not a technology problem. This is a human habit. Next, we have Invoice Trust Score. Ottimate's Invoice Trust Score is your automated first filter. It flags low trust invoices before they ever reach an approver, but use it actively. When something gets flagged, treat that flag seriously. A low trust score is the system telling you that this is going to need a second look. Third point being verified company domain is legitimate. When onboarding a new vendor, take 60 seconds tops. It's not going to take longer than that to verify their domain. You got to make sure the company website exists. You have to make sure that this is indeed a real business. And also, you got to ask yourself, does the email address they're using match their actual domain? Or are they using a free Gmail or Yahoo account? Ghost vendors almost always fail this check. It's going to cost you nothing to run it. And as I mentioned already, it's going to be extremely quick. And last but not least, we have the vendor setup process. Your vendor onboarding process should not live in someone's inbox. It should be a defined, documented workflow. Who's going to be able to add a vendor, what information is required, who approves the addition, and how banking details are verified before a payment is ever made. Every step logged, no exceptions for urgent new vendors. So it doesn't matter if someone is urgently asking you to validate their information or to try and make the onboarding process quicker for them. Here is all about knowing your business. So knowing your vendors is critical, but so is knowing your own business from the inside. These best practices are about internal controls, organizational structure, and the human signals that something may be wrong. Segregation of duties. This means no single person should be able to create a vendor, submit an invoice, and approve a payment. These are three separate functions, three different tasks. The moment one person controls all three of them, you have a fraud risk that no technology can fully compensate for. Map out who in your organization touches the AP process and make sure those functions are distributed across different people, or at the bare minimum, subject to independent oversight. Employee screening means that you have to conduct background checks and reference verification before hiring. So these are pretty much standard practices for a good reason. But employee screening isn't just about the hiring moment. It's about ongoing awareness. Changes in the employee behavior, their lifestyle, or their attitude can be early indicators of internal fraud. I'm not suggesting you should surveil your team at any given moment, but you have to start with a culture where managers are paying attention, and that's pretty much making a difference. So we have as well rotating card numbers. This prevents storing information, and Ottimate's vendor pay virtual cards are single use by design. So you have to bear that in mind as well. A randomly generated card number is issued for the exact invoice amount and expires once it's processed. There is nothing to store, there is nothing to steal, and nothing to reuse. This eliminates an entire category of payment fraud risk, card data breach, overspending, and unauthorized use of the card. This all happens in one single step. Reporting fraud right away and disputes. Time matters enormously in fraud recovery. The faster you report, the better your chances of clawing back funds. So working with your bank to dispute transactions and cooperating with investigators while the evidence is still fresh is of the essence. Do not delay reporting because you're embarrassed or uncertain. Make sure that you have to bear in mind that every hour counts in these type of scenarios. Second to last, we have insurance. So crime insurance and cyber liability coverage are worth reviewing with your broker if you haven't recently. Many organizations don't realize their existing policies may not cover internal fraud or social engineering losses. Know what you're covered for before it's the time that you need it. Last but not least, we have the employee red flags. These are the behavioral signals I was trained to watch for in financial crime. An employee who never takes vacation or refuses to let anyone else handle their accounts, unusual lifestyle changes, very inconsistent with their salary, defensive attitude or secretive behavior about their work, personal financial stress, or close personal relationships with specific vendors. None of these are proof of anything on their own, but if they're together, they're worth knowing. So we have now the additional best practices. These are a few more practices that I recommend for every organization, regardless of its size. There's two-factor authentication. You have to enable it everywhere. On Ottimate, on your email, on your banking portal, 2FA stops the majority of account takeover attempts cold. It is one of the highest ROI security habits that exists. There's multiple people through the verification process. Any action that involves money moving, be it a new vendor, a banking change, payments above threshold, that all should require a sign off from more than one person. Not just a policy, but a system enforced requirement as well. Annual and ongoing phishing training. This is very important. Business email compromise. The fake CEO wire transfer I described earlier also is not a technology problem. It's a people problem. And the only fix is training. Annual phishing simulations, regular reminders about what BEC attempts look like, and a culture where employees feel safe saying, I want to verify this before I act, are going to be your best defenses. Strong passwords, unique, complex passwords for every single platform. A password manager, if your team is struggling with this, is ideal as well. Shared passwords are fraud waiting to happen. Next, discourage account information sharing. So every person should have their own login. Shared accounts mean no audit trail, and if something goes wrong, you have no way of knowing who took an action. Individual logins are non-negotiable. It's gotta be a must. VPN and device control. Employees accessing financial systems from personal devices or unsecured networks create a risk as well. If your team works remotely or hybrid, VPN usage and device management policies matter and make a difference. And last but not least, we have avoid sponsored links. When searching for vendor contact information or logging into financial platforms, you have to go directly to the URL or use bookmarks you already have in place. Fraudsters buy sponsored search ads that impersonate legitimate sites. I've seen people enter credentials into fake login pages they found via Google. So as you can see, technology here is your strongest control, but your people are your first line of defense. When you combine the right platform with an informed, vigilant team, the fraudsters run out of places to hide.